1. Introduction. Welcome to this session on the overview of markets. Today we will explore the three primary financial markets that traders participate in: the stock market, the Forex market, and the cryptocurrency market. Each of these markets plays a significant role in the global economy, offering unique opportunities and challenges for traders. Before diving into the specifics, let's start with what a market is. In a financial sense, a market is a place, physical or virtual, where assets are bought and sold. These assets can include stocks, currencies, or digital cryptocurrencies. Markets provide liquidity, allowing buyers and sellers to transact efficiently and facilitating the flow of capital within the economy. Now let's examine these markets one by one, beginning with the stock market. 2. Stocks. How companies issue shares. The stock market is one of the most well-known and accessible markets for traders. It's where shares of publicly traded companies are bought and sold. A stock represents ownership in a company. Owning a share means you own a small piece of that company. When companies need capital to grow, whether to expand their operations, develop new products, or pay off debt, they often go public by issuing shares through an initial public offering. Here's how the IPO process works. A private company decides to go public to raise funds. Investment banks assist the company in setting an initial share price based on its valuation. The shares are sold to institutional investors and later to retail investors like you and me. After the IPO, shares are traded on stock exchanges like the New York Stock Exchange or NASDAQ. The stock price fluctuates based on supply and demand, influenced by company performance, economic conditions, and market sentiment. For traders, the stock market offers opportunities for both short-term gains and long-term investments. Short-term traders, often called day traders or swing traders, capitalize on price movements, while long-term investors aim to benefit from the company's growth over time. The 3. Forex, trading currency pairs. The Forex market, or foreign exchange market, is where global currencies are bought and sold. With a daily trading volume exceeding $6 trillion, it's the most liquid financial market in the world. Unlike the stock market, which operates through centralized exchanges, Forex is decentralized, meaning trading occurs across global financial hubs like London, New York, and Tokyo. Currencies are traded in pairs. Each pair consists of a base currency and a quote currency. For example, in the EUR-USD pair, the EUR is the base currency, the USD is the quote currency. If you believe the euro will strengthen against the US dollar, you buy the pair. If you think it will weaken, you sell the pair. The value of currencies fluctuates based on economic indicators, interest rates, and global events. Forex trading offers several advantages. It operates 24 hours a day, 5 days a week, with high liquidity and low transaction costs. However, it also requires careful risk management due to its fast-paced nature. 4. Crypto, blockchain, and popular cryptocurrencies. The cryptocurrency market is the newest addition to the financial world, but it has grown rapidly in popularity over the past decade. Unlike traditional currencies, cryptocurrencies are digital assets that use blockchain technology. A blockchain is a decentralized and transparent ledger that records all cryptocurrency transactions. It eliminates the need for intermediaries like banks, ensuring security and transparency. The most well-known cryptocurrency is Bitcoin, often referred to as digital gold. It was created in 2009 as an alternative to fiat currencies and has a limited supply, making it valuable over time. Other notable cryptocurrencies include Ethereum, known for its smart contract capabilities; Solana and Cardano, designed for faster, scalable transactions; Dogecoin, a meme coin gaining popularity through community support. What makes crypto unique is its 24/7 trading, high volatility, and decentralization. While the cryptocurrency market is highly volatile, it offers traders the chance to participate in a rapidly evolving financial landscape. The 5. Closing wrap-up. To summarize, we've covered three key financial markets today. The stock market, where companies issue shares to raise capital, offering opportunities for traders and investors alike. The Forex market, where global currencies are traded in pairs, driven by economic factors, interest rates, and global events. The cryptocurrency market, a rapidly growing space built on blockchain technology, offering unique opportunities and challenges. Each market has its own characteristics, advantages, and risks. Stocks are ideal for building wealth over time or capitalizing on company performance. Forex offers unmatched liquidity and accessibility, while crypto provides a frontier for innovation and high-risk, high-reward trading. As you progress through this course, you will dive deeper into each market, learning strategies and tools to navigate them effectively. Thank you for listening, and I look forward to guiding you in the next session.